What's up guys, welcome back to InvestingPH. For today, as always, since another month has passed, an update of my portfolio. Recently, the stock market had been trading sideways. There was a slight drop in the second week of March, but we are back again from where we started last month, and the PSE has announced something new for us investors that we will talk about later. So without a moment to waste, let's head on to the video. Again, before we begin, I would appreciate it if you smash the like button for the YouTube algorithm, and if you still aren't subscribed yet, what are you waiting for? Subscribe now. For those new to my channel, I have been investing for more than 2 years, and my strategy is a combination of dividend investing and value investing. So not all my stocks are high dividend paying stocks, take note of that. And to answer most of your questions about why I'm not investing in some dividend stocks, is that maybe it doesn't meet my criteria being a strong company that is trading below its intrinsic value. And I still see comments asking which broker to use. It's all the same. For me, it's all about convenience, ease of money transfer, and ease of buying and selling stocks. Now moving on, my total invested money is now 1,211,200 pesos. I've been consistent every month. The more I earn, the more I invest. Some have asked me, do I have an emergency fund? Yes, I do. I've already saved at least 2 months of expenses. And it got down to that number since I loaned from myself since stocks are cheap these times. I treat it as a loan since that money shouldn't be used for investing. Now, I usually keep 3 months worth of expenses. I loan from myself because you know that feeling when you see a company you like and it's trading at a cheap price, you just want to buy more of it. But since I don't have enough money, so I loaned 1 month's worth of expenses from my emergency fund. So that's the story of it. Anyway, right now my portfolio's total return is at 12.62%, so lower than last month. Though the difference is only 20k, the percentage has gotten much lower since I added more money this month. So when you look at your portfolio, especially when you invest consistently every month, your returns would be much lower since there's a constant inflow of money. So always take note of that. Though certain stocks decrease in value, it was evened out by other stocks that rose in price like DMC, Aboitiz Power, and Metro Bank. Now, this month's events were still the same as last month, an increase in the price of oil. But putting that aside, PSE announced its creation of a mid-cap index and a dividend index. Now for the mid-cap index, it isn't something new since the MSCI already has one like that. So the criteria for this one are the market cap, liquidity, and financial performance. It is composed of companies like AREIT, Bloomberry Resorts, Cebu Air, Century Pacific, Costco, Double Dragon Corp, DMCI, which was previously in the main PSE Index, DNL, Philinvestland, GMA, All Home, Manila Water, Robinsons Retail, Semirara Mining, Shell, and Vistaland. And for the PSE Dividend Yield Index, its criteria are, it should have a regular cash dividend for the past 3 consecutive years, free float, liquidity, and financial performance. Companies are Aboitiz Equity and Aboitiz Power, AREIT, BPI, DMC, DNL, Globe, GMA, ICT, LTG, Metro Bank, Manila Electric, MPI, Nicolasia, Robinsons Land, Robinsons Retail, Semirara, Security Bank, PLDT, and URC. Now, if you want to see this article, there's a link in the description below. Well, if you notice, some of these companies have a low dividend yield. Again, this index doesn't just focus on dividend yield alone. It also takes into account other things like financial performance. As for its total yield, I still can't seem to find it. So share it to us in the comment section if you have any idea. Now I just want to clear out one thing. Even though this is a dividend index, it does not mean that the fund that will copy it will give out dividends as cash. That depends on the one managing the fund if they would give out dividends as cash for their investors yearly. Because like the main PSE index, it also has a dividend yield. But what fund managers do is, they automatically reinvest all the dividends to the fund. That's why you don't notice it. Just like FMETF, it's a fund that tracks the PSEI. It doesn't give out cash to its investors. They automatically reinvest it. So hopefully with the creation of the PSE Dividend Index, financial institutions here in our country would create an ETF which is available in our local broker and would give out dividends for us investors. That's what we are lacking in our country. In other countries, they have these cash dividend paying ETFs that track dividend indices like this one, and they also have their ETFs that track the main index like the S&P 500 that gives out cash dividends. Because if you have one like that, I would definitely invest in it because a lot of investors want cash flow. They want passive income. So in my point of view, with the creation of ETFs that give out dividends, which are cash flow for us, this may encourage investors here in our country. But look, we only have one ETF, and the worst part of it is the management fee is so high. If we compare it to the Vanguard fund that tracks the US index, their management fee is 0.03%, while our cheapest index fund and the only ETF in our country, FMETF, its management fee is 0.5%. Imagine, the cheapest fund that tracks the PSEI is 16 times more expensive compared to the Vanguard ETF in the USA. More so if you invested in a mutual fund, equity funds that track the PSEI. They have 1% management fee, and actively managed funds cost around 2%. They don't tell you this when you invest in them. Some agents who are selling these funds don't even know that the fund they are selling has a management fee. Anyway, it's sad that we don't have a John C. Bogle in our country. If you don't know him, he was the founder of Vanguard. He revolutionized the mutual fund world. He wanted to provide funds that are cheap for individual investors like us. Such respect, because you see, those mere 2 or 1% fees would definitely affect your returns big time in the long run. You just don't notice it at first. So hopefully with the creation of new indices in our country, we would get more ETFs that are freely tradable in our broker. Because we really need it. We have such low numbers of investors. It's really disappointing. Anyway, moving on, the stocks I bought this month are Costco, LTG, and Pure Gold. For Costco, I only reinvested the dividends I got this month to it. That's why I was able to buy it. And I would still be buying more of it since it's really cheap right now. Even the company had been buying back its shares. Though just to be clear, share buybacks aren't totally an indication that the company is cheap, okay? It may just be one of the reasons why companies do it. With that, these are all the stocks I hold. Right now, LTG takes up the largest percentage of my portfolio. With the consistent acquisition of Costco and Pure Gold, it is now 3 and 4% share. And if their price would still be undervalued, I would definitely buy more of it. For my index fund, this is in my VUL. Its last value was 68,000. For my stocks by industry, holding companies take up the majority of my portfolio with 29%. I have explained this last time why I love investing in holding companies, since just by investing in one company, you get to hold indirectly the businesses they have. The second largest share is real estate, then banks, which I think will likely increase more in the future since there are still some bank companies that are trading at a cheap price. For energy, I can't seem to find a company that piqued my interest. For technology, both Globe and Cell are still beyond my buy price for them. For food and chemicals, there's only one company, DNL, which is also beyond my buy price for it. And for transportation, it's not my priority now. Moving on to the most exciting part of investing, dividends. This was a good month for dividends. Aboitiz Power, Metrobank, and Globe gave out their dividends, which now makes the total dividends I got this year to 9,736 pesos, making the grand total to 61,698. And for April, a lot of my stocks have already announced their payout. Security Bank, MPI, LTG, and DMCI. These are the companies that will give me the largest dividends this year, so I'm really excited for April. It's funny I still see comments that underestimate the power of dividends in investing, that you have to be rich already to gain anything from dividends. Well, who said anything about relying solely on dividends? And even though dividends are a small portion, it will play a big role in the grand total of your returns if compounded in the long run. I know in my videos I've shown a lot of proof why dividends play a big role. I'll show another one for today. This chart shows the S&P 500 index. The light blue graph shows the total price return. This is the total capital gains only. And the dark blue line shows the total return with dividends. So dividends takes up 1/3 of your overall return. See, to undermine dividends is such a funny thing. Those small returns would compound over the years. I can see it. There will come a day in my investing life that the dividends I get every year would be bigger than the money I invest coming from my daily job. You just have to let compounding do its wonders. You won't reach financial freedom if you won't start using it as early as possible. Moving on, this is my portfolio side by side with the index. As of now, the index is still at a negative 12.44% from its point when I started investing, while my portfolio is at 12.62%, and most of the positive returns I have came from the dividends I got, because in a sideways market, dividends will play a big role in your total return. With that, this ends my portfolio update for today, so I'm happy with the new indices of the PSE, specifically ETFs which are easily traded directly in your brokerage account. To end this, I share with you a quote from John Bogle, the founder of Vanguard. Learn every day, but especially from the experiences of others. It's cheaper. You don't have to experience it yourself. With the technology today, you can easily learn from the experience of others, especially in investing. Like in my channel, I am sharing my journey. You can learn from my mistakes or other finance channels out there. Filter it and apply the good things you get and create a strategy that fits you well. Or just copy the strategy of the proven legends like Warren Buffett. There's nothing wrong with that. So before you leave, I'd appreciate it if you click the like button first. And of course, if you like the content I'm showing and still haven't subscribed yet, now is the time you click the subscribe button. Thank you and see you in the next video.